Welcome to the DragonCruiser. Today, we're digging into a speech from economist Xiang Songzuo that was so explosive it got censored in China. Why? Well, it laid out some pretty terrifying systemic risks to the entire Chinese economy. Let's get into it. All right, here's how we're going to break this down. First, the big problem everyone seems to agree on. Then we'll look at the immediate symptoms, dig into what's really causing it all, and finally, get to the big one, the so-called Minsky Moment he warns is coming. So first things first, we have to start with a fact that apparently is a total consensus inside China. We're talking from the very top all the way down to the bottom. And that is, the economy is under some serious downward pressure. This isn't some outside theory, it's what they're saying themselves. And if you want to understand that pressure, you gotta look at the debt. Zhou Xiaochuan, a former CIIC chief, and, get this, the son of a former premier, put a number on it. Over 600 trillion yuan. I mean, that's a number so big it almost doesn't mean anything, right? But it's the bedrock of this whole problem. So you see, this isn't just about a bad financial quarter. This is someone from the inside asking a huge question. Can a system where everybody, the government, companies, you, me, just keeps borrowing to grow, actually last? He says, point blank, if it can, it would basically be breaking the laws of nature. And you know what they say about arguing with physics. Okay, so things are slowing down, but what kicked it off? According to Xiang Songzuo, this wasn't just a random event. He says there was a perfect storm of things that all hit at the same time, right around 2018. He points to 4 big triggers. 1, these deleveraging policies, which were supposed to reduce debt, were timed so badly they basically choked off the money supply for companies. 2, this created a huge crisis of confidence, especially for private business owners who were already hearing scary talk about eliminating private enterprise. Then, boom, the trade war hits, which was an outside shock to an already shaky system. And all of this was happening on top of the real issue. Companies were getting bigger by borrowing, not by actually inventing or earning anything new. But here's the key thing Zhang warns about. Don't mistake these things for the actual disease. He says they're just the symptoms, the cough and the fever. The real sickness is a deep structural problem that's been growing for a long, long time. And that brings us right to the heart of the economic engine itself. Xiang asks a really simple but powerful question. If all these companies are expanding like crazy, where's the money coming from? Is it actual profit from making and selling stuff? Or is it just a mountain of borrowed cash? And here's the difference, right? It's pretty stark. You've got growth driven by debt, where you just take out loans. Your company looks huge on paper, but you're not actually profitable. On the other side, you have growth driven by value, like a Huawei, that expands because it's innovating. The worry is that way too much of the economy has been playing the debt game. Now, have a look at this. It tells you everything you need to know. In the US, who makes the big bucks? Mostly high-tech, innovative companies. In China, the single most profitable entity is the state tobacco monopoly. Seriously. After that, it's the big state-owned banks. Tells you a lot about where the value is, doesn't it? And this creates a really messed up stock market. Get this. If you take the profits of over 1,400 smaller companies listed on the market and add them all up, it's still less than what 1.5 of the country's biggest bank makes. So you got to ask yourself, how can you have a healthy, booming market if most of the companies in it aren't actually making any real money? Okay, so this addiction to debt and this lack of real profits, it's all inflated, what Xiang calls the single biggest danger of them all, the real estate market, the ultimate bubble. At the time of his speech, the estimated value of China's real estate was, wait for it, 65 trillion US dollars. Yeah, you heard that right. 65 with a T. It's a number so huge your brain can't even really process it. Let's try to put that in perspective, because it's just insane. The value of all the property in China was worth more than the entire annual economic output, the GDP of the United States, plus the entire European Union, plus Japan, all combined. So how does something get that big? Zhang uses this term collective illusion.
It's basically when an asset's price just keeps going up, and everyone comes up with a million reasons why it's totally normal and will never stop. It's a shared belief that just feeds itself, completely disconnected from reality.
And he gives a perfect, chilling example. Japan in the 90s. They were in the middle of their own massive bubble. One analyst got so caught up in the hype, he wrote a book predicting the stock market would soar even higher. But before the book even got printed, the whole illusion just shattered. The market completely imploded. So what happens when you mix a mountain of debt, a lack of real profit, and a massive collective illusion? Well, this is where it gets really serious. This is the final warning in his speech. Xiang's argument is that this whole game, playing with leverage, debt, and finance, is completely unsustainable. He calls it building a mirage on sand. Sure, it can look pretty impressive for a while, but it's not real, and eventually it's guaranteed to collapse. And that collapse has a name: the Minsky Moment. This isn't just a slow, gentle decline. A Minsky Moment is a sudden, violent crash. It's when all the speculative bubbles burst at once and confidence just evaporates overnight. The whole system just implodes under its own weight. To get this, you have to realize that our entire modern financial world runs on one thing: confidence. It's a belief system. You have confidence that your house is worth what you think it is. Confidence your money is safe in the bank. Confidence your stocks have value. And most importantly, confidence in the system itself. The Minsky Moment is what happens when that faith disappears. Not just in one thing, like real estate, but in everything, all at the same time. The magic spell that holds the whole thing together is broken. And this quote just nails the terrifying logic of a panic. It becomes a self-fulfilling prophecy. The second everyone thinks their assets might be worthless, they all try to sell at the same time. They rush for the exit. But when everyone rushes at once, nobody gets out. The exit door slams shut on everyone.
So, Xiang's analysis, the one they tried to censor, leaves us with this pretty uncomfortable question. Is an economy built on this mirage on the sand about to face its inevitable moment of truth? Its own Minsky Moment? Something to chew on for sure. If you found this breakdown valuable, do us a favor and hit that like button, drop a comment with your thoughts, and of course, subscribe for more explainers from the DragonCruiser. Thanks for tuning in.